If you ever ask yourself, what is a short sale deficiency balance? You've come to the right place, although the answer may not be what you're expecting. Hi, I'm Dohn Thornton. I'm known as Don, the short sale guy, because in my 20-year career in Florida, I've helped well over 1,500 homeowners who were upside down their mortgages and usually in foreclosure get out from under a situation and have a positive outcome. In this video, I'm going to talk to you about what a deficiency balance is, why you really don't have to worry about it, and how it's going to come with a 1099-C, but I'll show you how that's not going to be anything to worry about either. So let's talk about what a deficiency balance is in a short sale. Well, quite frankly, it's the amount of money that is not covered when the property goes to sale, when it closes. Okay, so let's have an example. Let's say that your property is only worth $150,000. You get a contract for $150,000 from a buyer. Your real estate company, hopefully us, does the short sale for you because you owe $200,000 on it, and we are able to get the bank to take the $150,000 offer, but that leaves $50,000 of your debt, your mortgage debt, that is not covered. And so that is what a deficiency balance is basically just the difference between what was paid off on your mortgage and what's left over. Okay, so why that's what the balance is. Now, before short sales became very common, that was a real concern for a lot of people because they're going to think, oh my gosh, this is not paid off, I'm still going to owe money on it. So that was a big deal. So, but luckily, I'll tell you here just in a second why that's not a big deal anymore. But what I want you to do first is go down to the corner of this video and subscribe. Because I know that if you're on here and you're searching for this on YouTube and you came upon my video, it means you're interested in the topic. And I've been doing this for 20 years and I have a wealth of knowledge, and I'm trying to get all of this out and help people, homeowners, investors, real estate agents, anyone who's involved in a short sale, so they can understand in layman's terms, in common sense layman's terms, about how these things work. And so if you want to get notified when I have a new video about the subject, by all means, subscribe and you'll get notified when I have a new video. So why don't you have to worry about a deficiency balance in a short sale? Well, it's very simple. The mortgage industry, they instituted a short sale program specifically to help homeowners get out from under a property where they can't sell it with a full payoff. They know there's a deficiency balance going to be happening here. They also know that if they did not offer you any chance to have this forgiven and written off, then you would have no incentive whatsoever to do a short sale. So you might be asking yourself, well, why does the bank care? What's in it for them? Well, they figured out that they will usually get more return, or they will have less of a loss, let's put it that way, on a short sale than if they let it go to foreclosure auction, or if they do a deed in lieu of foreclosure. Because in a short sale, the property's closed, the loan is off the books, and they generally get a higher, like I said, they get a higher balance paid on a short sale than if they take ownership of the property one way or the other, whether it be a deed in lieu of foreclosure or they let it go to the foreclosure auction. That goes on their books as a real estate owned property. They have to maintain it, they have to manage it, there's more costs involved in it. They're not in the business of owning real estate. They're in the business of lending money and receiving money on the interest they charge. So that's why they are not going to screw you over. The short sale agreement will state specifically that any amount that's not covered by the closing will be written off and forgiven. So that's one thing you don't have to worry about, which is a good thing, right? So if this resonates with you, if you like the topic I'm talking about, if you have any suggestions about what you would like me to make a video about next, or you just want to ask a question, go down to the comments section and leave me a comment. That would be amazing. I love to engage with my viewers. So one thing that people need to understand is that when there is a deficiency balance that has been written off and forgiven, the bank is required by law to report this to the IRS, because according to the tax code that we have right now, any mortgage amount, any debt period that is forgiven can be considered as income, taxable income, by the IRS. So to be in compliance with the federal tax code, they are going to send you a 1099-C form, which covers forgiving debt. They'll send it to you, and they will also send it to the IRS. So you're thinking to yourself, oh my gosh, Don, am I going to have to owe taxes on this? And in a word, no. But I'm going to put a huge caveat here, a huge asterisk, a huge disclaimer. I am not a licensed tax advisor. I cannot give you tax advice. What I will do is I will tell you what my licensed tax preparer has told my clients, and I will tell you that you need to take this information I give you, take it to your tax advisor, and let that person advise you officially on this. All right. My job is to point you in the right direction, to give you the right questions to ask your tax preparer. However, there's two things that can help you get out from under having to pay any taxes with a 1099-C. If you included your mortgage in a Chapter 7 bankruptcy, the bank does not, the IRS, excuse me, does not consider that taxable income. That is not taxable income whatsoever. So your tax preparer would just need to make sure they file the right forms, let them know that yes, this was included in a bankruptcy, therefore it is not a taxable event, and you won't get charged. You won't owe any taxes. Now, you should be asking your tax preparer or your tax advisor about insolvency, okay? Because you're taking a huge loss in that tax year, and so therefore, for that tax year, you can have all or some of the debt be, whatever taxable amount reduced to almost nothing due to your financial insolvency for that fiscal year. So again, take that question about insolvency to your tax preparer and talk to him or her about that, and then they'll be able to give you licensed advice. But that's what my tax preparer, my CPA, has told my clients over the years. So I'm going to share that with you and urge you again, go to your own tax preparer or your tax advisor. Okay. So what I want you to do now is, if you are a homeowner and you're in a property that's upside down, you need to sell it, and it's going to be a short sale, go down to the description of my YouTube video here. There's a website, donbuyshouses.now.site. It's right down there. Click on that. And you can learn more information about me, and there's tons of forms there you can fill out. Your name, your email address, and your phone number, and leave that information with me. I will reach out to you directly, and I will talk to you about how I can help you in your situation. We've done so many of these over 20 years. My company has an A+ rating with the Better Business Bureau since 2014. One complaint in all those years. So we're really good at this stuff. We get them to work, and we specialize in it. Okay. If you are an investor and you run up against these kinds of homeowners where you would like to help them, but you just don't simply have the knowledge to be able to do a short sale, then you want to be able to monetize those leads, just so throw them away. Work with me. Go down to the description. There's a video there as well underneath the homeowner section, or not a video, I'm sorry, a website, and you can check it out and reach out to me, and we can definitely talk, because I can help you, monetize those leads and have a nice second income stream. And if you are a real estate agent and a homeowner comes to you and wants you to do a short sale, list a property with them in a short sale, and you're really not into it because you don't like them, you don't know how to do them, and hey, I get it, they're not easy. Refer them to us. We'll get you a 25% referral fee at closing. We'll do all the heavy lifting and make sure you get paid for it. So why do something you don't want to do when you have us here that can do it for you? So thank you for watching this video, and I look forward to seeing you the next time.